What's up, financial Zen masters? Today, I'm going to show you how you can contribute $58,000 this year into your 401k if you work for yourself as an S-Corp. Boom. But first, welcome to the Financial Zen channel, where the big question is, how can you, a super successful, hardworking professional with kids at home and a mortgage to pay, how can you quit your 9-to-5 grind to go pursue your passion while still providing for your family? That's the question. I got your answers. I'm Rick Valenzi, and I'll be your guide. Okay, so yesterday we learned why, if you work for yourself as a sole prop or an LLC, or if you're just even a 1099 employee, contractor, why you want to form an S-Corp. You're going to save a boatload in taxes, right? A boatload in payroll taxes if you're an S-Corp and you work for yourself. So we already covered that. If you missed that video, click the link below. I'll include it. Go back to it and watch that first. But if you got that and that made sense to you, then I got another special treat for what you get when you're an S-Corp for you today. And that is you can save 58 grand into a 401k if you work for yourself as an S-Corp. Okay, so here's how it works. So it's called a solo 401k. Some places call it an individual 401k. It's the same thing. It's a one participant 401k plan, meaning just you and nobody else. And you can do it if it's just you or you and your spouse, even for the same company, right? As long as it's the same tax return. And here's how it works. So the first portion works just like any other old 401k, right? This year, in 2021, you can contribute up to $19,500 into your 401k if you're under the age of 50, right? So, $19,500, right? So that's the same if you work for yourself or if you work for a company. That's the maximum you contribute as an employee contribution. So that doesn't change. Where the magic is in the employer contribution. So you know how if you work at a company, you get the match, right? The match is called employer contribution, which makes sense. That's the money that your employer is putting into your 401k. Now, if you're an S-Corp and you work for yourself, you are both the employee and the employer. So you can do both. But unlike the measly amount that your employer, if you're a W-2 employer, gives you in form of the match, which is usually 100% on the first 3%, another 50% on the next 3%. You contribute up to $38,500 as an employer contribution, okay? To add up to $58,000 into your 401k. Magic. Okay, now here's a quick breakdown of things you need to look out for and how it actually works. So your employee contribution, okay, is fully tax deductible. So as long as your company makes $19,500 this year, okay, you got to pay payroll taxes on that amount because all this money has to run through payroll, right? So you got to pay payroll on that. But because you show that $19,500 into your 401k as an employee contribution, which is the maximum, that won't hit your income, right? You're not going to pay income taxes on that now. You'll pay on it later when you take the money out. But you'll save on income taxes right now, okay? Now, the $38,500, the caveat to that is you can only contribute up to 25% of whatever you run through payroll, right? So here's how the math breaks down. If your company made $154,000 last year, or this year, okay? 25% of $154,000 is, guess what? $38,500. Okay, so if your company made $154,000 this year, 25% of that is $38,500. That's how much you can max out and add to your 401k. Add that plus that, $58,000. Boom. Now, that said, you do have to run all this $154,000 through payroll, so you're going to pay that 15% payroll tax, right? And the deduction, now the 58 grand that you can contribute into your 401k, that will be deducted from this amount, right? So that means the amount of money that hits your income, right, in terms of income taxes, is going to be, what's 58 minus 154 is 96,000. Did I do that right? Yeah, 96,000. So you're still going to have $96,000 in income out of that 154 that you got paid, hit your income, hit your tax return in the form of income, but you still saved $58,000 into your 401k, $58,000 that you're not going to pay taxes on because you have an S-Corp. And you can only do this, actually that's not true. There's different versions of this. If you're an LLC, if there are other forms of this, but if you're an S-Corp, this is the coup d'etat, is that the right word? Of what you can do. So this is magic stuff. So again, form an S-Corp because you're going to save on payroll taxes overall. And if you make it out, 154,000 plus, you can max out your 401k contribution, $58,000 a year. Beef up your 401k, reduce your income taxes. And I mean, what's better than that, right? So thanks for watching. Hopefully I hope you learned something. Again, this is not common knowledge. This is this is not everybody that runs their own business understands this stuff or knows this. So spread the word. Like if you know other people that run their own business, forward them this link. They need to see this. You need to help me spread the word. We need to keep more money in our pockets and less in Uncle Sam's. Yes, okay, we'll leave it there. Subscribe below if you're not already. Like the video if you learned something. Leave a comment. Let me know what you learned. Let me know if this was eye-opening to you. I love to hear the comments. And we'll see you next time. Thanks, guys.